Hello everyone, hope you all are doing well. I welcome you all to my another live stream today, and I wish all of you a very happy and prosperous New Year 2023. So what is our today's agenda? Our today's agenda is review the performance of my last analysis. Whatever analysis I did in my last couple of live streams, I'm going to review that. Then we will discuss today's topic, which is indicators versus real price action analysis. And finally, I will take you through Nifty, Bank Nifty and some stocks to find out some trades or to understand what is market going to do in coming days. So be with me till the end. So friends, this is the predictions I made. These are the live session dates. So 16th October 2022, I took a live session and I said market will be bullish, and we got a success that week. This is a weekly prediction I made. Since then, I made so many weekly predictions. Out of that, one was partially success and two of my analysis failed. So approximately I am making a success ratio of 72.7%, out of which 18.2% is of my failure in predicting the market. If you remember, last week I didn't took, it was 25th December and I didn't took a live session. So the week previous to that, I took a live session and I tried to predict 2 weeks in one session, and I also told you that it will be little difficult to predict something beyond 1 week. And this is what the result is. So that week price, I said it was going to become bearish, and price created a bearish candle, a very bearish candle, a very big bearish candle. So then I said, okay, if a bearish candle forms this week, might be the next week also be a bearish candle. That didn't happen. Basically, the first week or the third week of December, price created a very big candle, very big candle. It is a candle which is a size of 2 candles. So what happened? The very next candle, the price moved up and created a green candle. So my analysis failed in that case. So let it be. We are analysts. Our analysis can work and sometimes may not work. But we will always try to find out the best outcome from the analysis. That is our goal. Our goal is not to become 100%, we need to have 100% success ratio. If that is something we are looking for, that is little, little difficult to get. Often we get a small 1 or 2 failures, but that's okay. Till the time our success ratio is above 70, 75, 80%, we don't have to think about it. Even 50% is very good as far as market goes. So this is my weekly prediction, and it is working quite well, and I personally is very happy with this. When I look at the monthly predictions I did in these live streams, 16th October, 6th November and 4th December, on these live streams, I said that I am expecting October to be a bullish candle. October to be a bullish month. And it did happen in the chart. Then I said, okay, November will also be a bullish month, and that did happen. I will show you the charts in some time. And I also said, okay, December will be bearish, right? And it did created a bearish candle. Not only that, I also predicted that in December, there will be an advanced candlestick formation which will form in Nifty, which is known as dark cloud cover. And believe on you me, that price has created a dark cloud cover in Nifty chart. When I predicted this, there was, the entire market was bullish. And everybody was thinking about a breakout long trade. And I am the only person who was talking about that price will go down. So this is my monthly prediction. We will see all these in the chart in some time. I have given 3 investment calls by now, 2 calls on 23rd October 2022, and Glenmark last 2 weeks, it also moved up and given higher returns of 13.26%. Bank Baroda touched 37.37% and then retraced back a little, but don't you have to worry. If you are an investor, you don't have to worry about retracements. Price never moves up in a straight manner. It moves up a little and then it comes down, then again it moves up. This is the habit. Sometimes price moves up much and then it becomes sideways for a long time, and then again it bursts up and goes up. Our prediction is that this Bank Baroda will double our money, and that will happen. That's what I think. So till now, it has given a 37.37% return, and then it is retracing back a little, but we don't have to worry about it. NMDC gave a 3.77% return, and then it also retraced back and then recovered. So you see, in investments, you shouldn't be booking out. If there is a small retracement happening, you shouldn't be booking out. You should be holding it. And if you hold it, my guarantee is that these stocks will make good returns. Okay, so this is my trades which are working well, and look at the time which is it taking to move to the targets. So first one gave 13.26% and 2 months 8 days, just 2 months 8 days, right? 37.37%, just 2 months 8 days, good enough. And this one 3.77%, 21 days, good enough, no problems, right? So that is my investment calls. They are working beautifully. And then I also gave some trading calls in these live streams only. My last 10 live streams, I have given these trades in public. Okay, so you can go and verify, because all these trades were given before they happened, before they were executed. So anybody here could have taken that and make money. Okay, so all these trades, whatever you see, I have given. So first 4 trades I have given on October. Only 2 got fill, and both we earned some good money. Then on November I gave 2 trades, both were success and both gave nice money. And lastly, December I gave apollotyres. The trade didn't got executed, so I cancelled the trade. Okay, because there was something cooking on. Until unless we redo the analysis, we cannot take that trade. Okay, because approach is very important while you trade using price action. So I said, okay, cancel this trade, and you believe on me, price came very near to my entry, 305. I gave an entry at 303.60, price came to 305 and bounced, right? And very close to my target. Anyway, that happens. Sometimes that happens. We don't have to worry about it. So that is a brief review of my performance. Now let's go to the topic of the day: indicators versus real price action analysis. Many a times when we search for price action videos, we get many videos talking about price action with a certain indicator, like price action with moving average, price action with Bollinger Bands, price action with RSI and whatnot. On the other hand, there are few videos where they say price action without indicators or oscillators. So do price action analysis is all about indicator or oscillator analysis, or it is something else, or it is both? What it is? Let's find the answer. So indicators versus real price action analysis. What is indicator? Indicators are mathematical computations plotted as lines on a price chart that aid traders in identifying certain signs and trends in the stock market. Whereas price action, any price movement in the chart is known as price action. It's just nothing. The movement of price is price action, right? So we don't have to calculate it out. There is no calculation involved, right? And price action analysis is done by considering the patterns, the stiffness of the movement, etc. and etc. which gets created due to the price oscillation in the chart. So we look for those patterns, we look for those stiffness of the trend, we look for those trap zones, and we understand whether the price is going to go up or it is going to go down, right? We look at the price to understand that whether price wants to go up or it wants to go down. So we don't need any indicators or oscillators for price action analysis. Hence, indicators are a derivative of price action. Price moves, indicator gives you a signal. Price doesn't move, indicators will not give a signal. But price action, so price action is the source of all technical analysis. Without price movement, technical analysis is not possible. So, price action is the virtue of all technical analysis, we can say like that. Once price moves, a certain indicator, we can get some signals, okay? Indicators are always a laggard, as it is calculated after a movement in price. By the time the indicator gives you a signal, probably the price has already completed the trend. If it is an up signal, the long signal, then probably the uptrend is completed. By the time you are entering the trade, the price might be coming down. It has changed the trend and it might be in downtrend. That's a biggest problem because indicators are laggards. Price action, on the other hand, is always leading, as it is always about price movement. If price moves, it will show you that yes, I want to go up. There is a pattern formed and the bias of the pattern, say, is long and you are going to take a long trade. So price immediately gives you that signal that whether you should go long or go short. You are not calculating something from it. So your signals are as soon as the price moves, you get a signal, right? So it's always leading. When you look at indicators trading, you mostly get 1:1 error, right? 1% stop loss and 1% target. That is what you always look for when you trade with indicators. You cannot have a big error, right? On the other hand, when you use price action analysis, mostly error is more than 3:1 per trade. It can go up to 10:1, 50:1, whatnot. Why? Because you are trading the trap zone. You are plotting your entry, stop and target at the trap zone. It is very easy to find entry, stop and target because you are plotting a trap zone and you are trading that. That is price action analysis. Whereas when you use indicators, it is very difficult to place the stop loss. You are calculating out and placing the stop loss. You might be using some kind of a volatility stop loss, or you are placing 1% stop loss. Whatever it is, maximum times what happens, I have seen personally, I don't know, you agree or disagree, that's up to you, that the price comes, hits the stop loss and then gives the target. That often happens with indicators. Yes, I must say there are few traders who also work very well with indicators. They are very good. So all kudos to them. But here I want to talk about the whole community. So when I look at the whole community, I see many traders who are using indicators but not getting good results. So I'm talking about them. Here, so when it is very difficult to hypothetically draw a stop loss and a target. I mean, most often you will see it getting hit. Whereas when using price action, you draw a trap zone and you put your entry there, your stop loss below and the target above. What happens if your stop loss is hit in a trap zone? You believe to think opposite. It's a signal. It's a signal for a different trade. So your stop loss also gives you another signal for another trade. So stop loss happening in price action is not bad because it gives you a signal for an opposite trade. Right? So that's why price action is much ahead of indicator trading. Sorry. So let's take an example. In this case, I will take the example of RSI. I could have taken example of moving averages or many other things, but I took RSI because I feel that RSI is something I know much better. So the strength, the relative strength index, RSI, is a momentum indicator. RSI measures the speed and magnitude of a security recent price changes to evaluate overvalued and undervalued conditions in the price of the security. The RSI is displayed as an oscillator, a line graph on a scale of 0 to 100. The indicator was developed by J. Wells Wilder Jr. and introduced in his seminal 1978 book, New Concepts in Technical Trading Systems. The RSI can do more than point to overbought and oversold securities. It can also indicate securities that may primed for a trend reversal or corrective pullback in price. It can signal when to buy and sell. Traditionally, an RSI reading of 70 or above indicates overbought situation. So when it is overbought, you are supposed to sell. A reading of 30 or below indicates an oversold condition. So when it is 30 or below, you are supposed to buy this stock. I have taken this portion from this definition of RSI from Investopedia. So, but when I look at whatever knowledge I gained from the community of traders I am being through my gurus and all of them, I have seen some traders also use extreme readings like 80 or above as an indication of overbought situation and reading of 20 or below as an indication of oversold situation. So when RSI is above 70 or 80, you sell. When RSI is below 30 or 20, you buy. Simple. This is the signaling system of RSI. Apart from that, they also use RSI divergences to understand price reversals. RSI at 70 and divergence means a good shorting opportunity. What is a divergence, by the by? Divergence means price is making higher high, but RSI at the same time making lower high. This is called divergence. Okay. So RSI at 30 and divergence means a good long opportunity. In this case, price is making lower lows, but RSI is making higher lows. So that's how you come to know that there is a divergence in RSI. So these two signals are said to be very strong signal, and you can go long or short. Few traders also are there who mark few traders are also there who mark conventional patterns, right, over the RSI. They mark a symmetrical triangle inside the RSI and they will find out a trade. So some traders also do that. I have seen that those videos in YouTube and beyond from some of my gurus as well. So some people use conventional patterns over RSI rather than putting the conventional pattern on the price chart, the candlestick chart. They put it on the RSI chart and they try to find out the price direction. And also I have seen some traders who use Fibonacci retracement tool over RSI, okay, and they take something like 61.8% and 38.2%, and they have like their buying is like, if price closes above 61.8%, yes, you should be going long, right, opposite. And if price closes below 38.2, you should be going short, something like that, right? So they uses it in a different manner. If price closes at 50%, that has a different game altogether. So I have seen some people also using this Fibonacci retracement tool over RSI and try to find the direction of the price. So in this case, I have done the most easiest thing. I have plotted RSI on the chart. The above boundary is the 70 point and the lower boundary is the 30 point. So whenever RSI goes above 30, you see price will come down and RSI will also come down. When RSI will reach 30, the price will go up and the RSI will also go up. It will become overbought at 70 and the price will start coming down, and as you see, price will start coming down. Once price comes down at the 30, what happens? The RSI becomes oversold and you should be buying and the price should go up. Once RSI goes up to the 70 mark, it is overbought, you should be selling, so on and so forth. Such a beautiful indicator, isn't it? Such a beautiful indicator. You just plot it and you just keep on trading, right? On the other hand, we have price action analysis. We look at the price, we don't use anything. We look for the trend, whether the trend is steep. If it is steep, it will change. We look for price patterns, right? And we look for trap zones. So here I have marked a trap zone. In fact, this is a trade I have given in this live, one of these live streams. You can go and verify. So I have given a trade from here, long trade till this point. I think 3:1, 4:1 are a trade I have given. So we have trap zones and we went long. So in price action analysis, we try to find out the trend, we look for patterns, we look for trap zones, and we trade using risk management. I mean, when you are using indicators, you also use risk management. So it's common to both of these systems. Now, if RSI is so good, then why we will trade price action? Why not we will go for RSI? And RSI, it's so beautiful because I will only plot RSI and I will keep on trading. I mean, it's so beautiful. But that's not the case, right? This is something I can show you and I can build a RSI course and I sell you. Isn't it very nice? Right? 70, 30, 30, 70. Such beautifully the chart is happening. Now, the problem starts here. Look at this. Same chart. I am in the same chart. This is Axis Bank chart. Okay. So, this is RSI 70. And then what's happening? Price is creating higher highs. Okay. This is a high and this is a higher high. higher lows. Okay, this is a uptrend, and in RSI what's happening, this is a high and this is a lower high. While price is creating higher high, RSI is creating lower high. Okay. So what is the indication as far as RSI? I know many of you know RSI better than me, right? Tell me, what will be the indication? What will be the signal? Signal will always be, you should be shorting. Now you shorted here, right? You shorted here. You have confirmation that 70 and above. In fact, this went up to 80, I think. So there is a divergence. What will you do? You will take a short trade, right? And what's started happening? Price started moving up, and RSI is sideways. Can you see that? RSI is moving sideways, sideways, sideways. And then suddenly RSI came down to 30. So from 70, 80, RSI came down to 30. Oh, then price must have come down along with the RSI. I mean, RSI was 70, price was here, RSI was 30, RSI has come down after that to 30. So price must have come down. But what's this? Price actually moved up. Price never came down. What's happening? So these are the traps, my dear friend. Nobody will tell you this. Nobody will show you this. Okay. So RSI can be 70 or 80 and above. It can show divergences, but RSI can correct without price going down. RSI can correct without price going down. How it happens? Two ways. When price is slowly moving up, basically with a low volatility. When price moves with low volatility, RSI has a habit. This is something I have observed over the years. Okay, so whatever I am saying, you can go and backtest in many charts. I will love to see you doing backtesting. Don't believe on me. Don't believe on me. Don't believe on anybody. The charts are there. The charts you can get for free. There are many platforms. Go ahead, plot it, check, do your own you are the best person. Go and do the back testing. And once you do the back testing, if you find this kind of scenarios, then you are adding up to your knowledge. Okay. So this is something I have seen from my back testing. So I am showing it to you. And I believe before this, nobody was ever told you about these facts. I think so. Anyway, so when the RSI or the volatility slows down, the RSI can correct from 70 to 30 or 30 to 70. But price will never move in your direction. That is why this indicators gives a lot of losses also. Okay. Now, when I look at the price action indication here, price action here, price has created a reversal pattern. So price returned to it and moved up. Okay, demand reversal pattern, then MIPs or reverse zones, and these are continuous trap zones which are getting created at the same point. Okay, so as far as price action goes, price action is telling you no, go long, do not short, whereas the RSI is telling you go short. See, there comes confusion. There comes confusion. RSI is telling, I'm taking only one indicators. Now somebody might come and say, okay, I know this happens, so that is why I use another indicator, maybe 10 more indicators in the chart. Yes, I know you use that, right? I'm not going to discuss all the indicators, putting them there and again getting different signals. So I am not going to go inside that. I am making it very simple. I hope that will help the community. So the RSI is approx 70 and divergence is there. So this is a selling call, whereas the price action is telling in no, don't go short because trend is not stiff. the trend, there is no trend change signal at all. There is no reversal patterns formed. So why you want to go short? But RSI is saying short, then I should short. So look, if now the question is, they are saying price action with a particular indicator. So I have taken RSI. Now if I want to trade price action and the indicator together, am I be able to trade it? Because I am confused. I don't know what to do, whether to believe the price action trap zones or whether to believe the RSI. Which one should I believe? Tell me. I am there. So it's very difficult to trade using both when both the system are giving different signals. It's very confusing. Okay. So in this case, definitely the RSI was failed. RSI failed, but the price action worked. Let's see another example, right? Again, RSI, I mean, that is what I was saying in my last slide. RSI can correct without any movement in price. Okay, so look at this 70, right? Above 70 or 80, and there is a divergence, lower high, higher high. So there is a divergence, and we expect the price to drop. Price dropped, is it? Then it should go low, below this low, but it started moving up before that. So what happened, basically price moved sideways. This is a sideways kind of a movement, right? And then price moved up. So yes, this is a flaw. I mean, if you are trading there, you either make us very small profit, very small, maybe 0.10 is to 1 RR, right? Something like that you might make profit, or you might make loss in this kind of a scenario. If you are trading with 1% or 1%, something like that. So this is the challenge of RSI. Here, look at this area. What happened? Above 80 and divergence. Look, higher high, lower high. It should go down, and RSI started going down. But what happened with the price? Is it going down? Is it going down? No, it is going up. So we understand that RSI can be 70 or 80, but price can still go up. RSI can be 30 or 20, price can still go down. And that is the challenge with all the indicators. Different indicators, different challenges. Okay. Whereas look at the price action, there is no stiffness of trend. There is no reversal pattern form. There is a trap zone and price is only sideways over it and then busts up. Same here, right? So this is what I mean. The price action is telling you go long, don't short. And whereas on the other hand, RSI is telling you go short, 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 and every time you take a short, you are making loss. Okay. Now you can use moving averages over it. You can use stochastics, whatever you want to reduce these false signals. That you can do. Okay. So the conclusion: indicator analysis is laggard, whereas price action analysis is leading. Often price action analysis goes against indicator analysis. Indicators will tell you to go long, whereas price action will ask you to go short. Hence, it makes the trader go confused. So it is difficult to club them together and trade. Somebody might come and say, PG, what I will do, I will use both. Whenever they will not come together, the price action will say go long and RSI will say go short, I will not take a trade. I will only take trade when price action also will say long and RSI is also long, right? But then the problem is you will get very less trades. You will get good trades, but you will get very less trades. And you will actually miss a lot of good opportunities. Okay, you will actually miss a lot of good opportunities because you get confused. You are not able to take those trades. If you would have relied on price action, you would have taken those trades. How to rely on all that I teach in my courses. Okay, so so it is difficult to club them together and trade. Indicators can correct itself without price moving in that expected direction. This is something no one will tell you. This is something I'm revealing to you so that you never get stopped out. As I did when I traded all these systems, I traded these indicators. Don't you think that I am just coming and telling you all this. These are from my experience. What I have faced, and this is the thought process which I got from all those experiences. Okay, and I'm sharing it with you today. Okay. Fall in volatility can also bring down RSI from 70 to 30, 30 to 70 without taking the price down or up. RSI can be 80, but still price can rise. Think about that. RSI can be 20, but still price can move down. Most often, price action analysis gives better signals than these indicators or oscillators. And that is why I do not use indicators and oscillators in my analysis at all, because I don't want to get confused. I see some of my students also using try to use everything, and then I go and I tell them, please do not use, because you are making yourself it's not going to help you. You are going to make yourself confused, and once you are confused, you will not be able to take trades. Believe in me, right? So these are two different systems. Allow them to be different. Okay, don't try to mix it. That's my suggestion. I mean, obviously you might be better than me. Your understanding can be better than me. You have a better strategy, might be. Then it's okay. But I am talking to the 99% of the community, trading community, not the 1%, right? That's already I have defined. And exactly that is the reason nowadays they name everything with price action, right? Earlier you used to learn indicator, RSI, Bollinger Band. Now they say, okay, price action with this or that. So price action is getting popular because price action is working. Indicators cannot give you better RR in comparison to price action. That's a big difference. As in price action, we have trap zones to trade. You have a small stop loss, less than 1%, less than even 0.5%, and a big target, 5:1. That's great. Hence, price action analysis is not indicator or oscillator analysis. It's different and better. It's trading using the price itself. Okay, so with this I conclude today's topic. Now let's go to the analysis of the chart. Before that, I would like to say that I have 3 courses on price action: PG Strap Trading Masterclass, PG Elliott and Harmonics Masterclass, and PG Option Masterclass. We do not use any indicators or oscillators for these courses, but they are really good courses and you should be looking forward to them. If you like my session, if you feel these sessions are really helpful to you, if you feel something I am giving it to you which are really helpful for you, then please like my session, subscribe my channel, share my channel, and do comment and let me know what you feel about these sessions, and also tell me what you want, right? So we are at the third part of today's session, and that is the analysis part. If you remember, December 1st or December 4th, whenever on December I took this session, I draw this red rectangle. At that time, everybody was bullish because price engulfed this resistance, which is and entered the all-time high. All-time high means price has never reached this price. Okay, so this is making a high which is higher than previous high. It's all-time high. Okay, so this is a breakout which happened and everybody was very happy because there was a breakout and nobody was thinking price will go down. Everybody was thinking price will go up. So I was the only person who plotted this area using some Fibonacci, which I am not revealing here. I'm so sorry for that. That I will teach you in my Iliad class. Anyway, so this is a at that time I said, okay, price has gapped up. And now I am expecting that a red candle will form in the monthly chart and the dark cloud cover candlestick pattern will form. So how to know this is a dark cloud cover? Simply you have to understand that that dark cloud cover, right? The second candle will gap up and then it will engulf 50% of the range of the first candle's body. Both are momentum, and that is what happened here. That is what happened. Now, what is a dark cloud cover? Very simple. You can go and search the internet and you will get a lot of reference. Dark cloud cover is a reversal pattern. And when it is a reversal pattern, if it is forming after a big rally. So is market at a big rally and then this dark cloud cover formed? Yes. So what happens when a dark cloud cover forms? Price moves down. So what will be my expectation? My expectation is price will go down at least for 1 or 2 candles. We will decide later on how much, but there is a chance price can go down. I mean, these are not trap zones, so don't worry about it and don't try to take a long trade. I mean, some people, they assume that they know everything, the trap zones, and they will mark this as a trap zone and try to go on. Don't do that, right? So this is what I believe, that price might create some kind of a base candle this month and then slowly it might come down because a dark cloud cover has formed. So my analysis has worked out. Now this is what I was talking about. On 18th December, I took that live stream and I said price just created this base candle. Didn't I said that price will go down? Price did went down. I marked 2 candles and I marked it, the arrow was still this base candle and price actually came with one single candle to this point. So what happened this week? It created a bearish candle as expected, but the next week price again moved up. So what should happen? What should happen? I believe even price moved up there, nothing to worry, because I expect price to come down. Okay. In fact, come down. If it comes down, I will be observing very, very closely whether it breaks this low. Okay. If price, listen very, very carefully, my dear friends. If price breaks this low, there is a big chance of that. There is a very big chance of that. If price breaks this low, why I am thinking this chance is there? Because in monthly chart, dark cloud cover formed. So there is a chance. Now, if price breaks this low, what forms? This is a higher high and this is a lower low. Sorry, this is a higher low and this is a lower low, right? So price is breaking a higher low and creating a lower low. This is not a good sign, and any retracement will take the price farther down and everything is tested here, right? So think where we are standing right now. But on the same note, I must tell you, this coming down is not a bad thing happening for Nifty or Bank Nifty. Okay. Why? Because this coming down, okay, will ensure that the price will go up for a long, big, a big rally can happen there. Okay. So this going down is not bad. In fact, the more price comes down, the more you should look for investment trades. This is the best time to invest. I tell you, the more it comes down, look for those beautiful stocks and invest your money. You will become rich. Okay, so this drop is very good, and don't you worry that price is coming down very sharply or very like a knife. It can come down, but falling knife it can come down. But don't you worry. Invest. The theme will be to invest in this drop. Okay, keep this in mind, because thereafter price will go up anyway. So I am expecting price to come down, and if this breaks, then we will take the short trade of the life. Okay, so we will wait, because there is no trap zone where you can take a long trade. Yes, if price makes a higher high, then we will decide upon what to do, because we are doing price action analysis, and price action analysis is not right. It's not like I am thinking that price will come down and that is the end of the day. If price goes up, I am blank. No, that is not price action analysis. If price goes up, it will signal something else, and if it signals something else, we will do accordingly. We will change our perspective and go accordingly. Okay, so that is how price action analysis is done. So my analysis says that Nifty might come down to this point. Okay, now how to trade? I think the way, I mean, one trade was there, but it already got executed. Rather than going for immediately, I mean, jumping into a trade, what we can do, we can wait for in an hourly chart and wait for this to break, this low, right? And once this low breaks, on retracement, we can go short. Okay, so something like this we can do in a Nifty chart. Okay, as of now it is not ready, so I am not plotting any levels, because I cannot plot until or unless the pattern gets completed. As of now, no pattern was complete, so I'm only showing you the direction which I am thinking. These are my bias and not a trade. Make sure you understand we are at the same page. There are two things. There is a trade and there is a bias. Bias are predictions. Bias can be your your directional thought. Okay, what Nifty can do, how it can do. But when it comes to trade, we need trap zones. As of now, the trap zone is not ready, so I cannot give you a trade. When I give you a trade, I will give you a trade with entry, stop and target proper, right? So these are bias. If Nifty comes down, I will say, okay, it has created that. So what I am expecting basically this week also, I am expecting a bearish candle, okay, in weekly chart. And overall, January, a bearish month, probably. I'm looking at it. It will become a bearish month. Okay. So this is my analysis for Nifty. Now let's quickly go to Bank Nifty, what it is doing. So Bank Nifty, let me take you to the daily chart. This was my prediction, isn't it? Right? I drew this ascending channel, and I said from this point price will come down to this point, right? I think 70-75% price has come near to my target and then moved up. So what's happening? Basically nothing happening. What happened? The channel formed, price, I mean, there was one thing happened here is the candlestick. Okay, it created this candlestick, and thereafter it took out the stop of this candlestick and then come down. This sometimes happen, but the channel never got stopped out. Okay, and price has come down. Now what happens? Price came down, breaks this trend line. Okay, after break of a trend line, price often returns to the trend line, okay, to retest it, and this is what a retest is known as. Price just moved up, retested it, there is a trap zone, and price started coming down. Now, how to trade this? Same as Nifty. What I will do, I will just simply wait for this low to get engulfed, and on retracement I can go short, because I'm also expecting if Nifty goes down, chances are Bank Nifty will also go down. Though sometimes they do not work, in the same direction. They are not 100%, they do not match 100%. Their approx match is around 67 point something percent. So, but still I believe the price of Bank Nifty will hit my target. The Bank Nifty will come down, but just a second. The Bank Nifty will come down. Once it breaks that low, you can take a short trade, but right now I am not able to give you any entry because price has not created the trap zone yet. One trap zone was there and it is already giving reactions. Okay, so that trap zone I have already discussed with my students and they probably may be trading, but right now, as because we are taking this live stream on on January 1st, and today is a holiday and this level is already reacting, I will not give you this level because it has already given its reaction. You never know, when second time it goes, it might break, you never know. So it's not good to take a trade on the second touch. So it's better to wait for another formation of trap zone and then we can enter and make this money. So yes, this is what I think is going to happen to Bank Nifty. Price are going to go down. So this week I think bearish candle, and then month I think maybe bearish candle, something like that. So that's my Bank Nifty analysis. I hope you like that. And I also discussed about that thing, apollotyre. Okay, apollotyre, this was my entry 303. This was my entry. My stop was below here. Price came down very near. Can you see that? 305 and bounced. This thing, almost near to my target. 2 points to target. So these things keep on happening. Sometimes they happen. I don't care. And this is the reason I know now if price comes down, this level will break. And that's why I said, okay, better to cancel this trade. Okay. Why to give our stop when we know it can break, right? That's the simple logical thinking. Everything we do in price action is logical. There is no confusion or any illogical thought process. Now, today is 1st of January, and at 1st of January, I want to gift you one investment trade which I have thought to deliver to you today. So I have this chart called SAIL. Okay, Steel Authority of India, and this chart, when I go to the monthly, I don't have subscription of TradingView now, so they are giving the advertisement. Anyway, so this is, look at the monthly chart of Steel Authority of India. So what's happening here? Price started moving up from this point. This is the low. Price made a very big high. Okay, it became very steep, and once it's steep, it changed its trend, and the downtrend started, and price started coming down. When price came down to the bottom, it came down more than 80%. It came down more than 80% of the rally. Then what happened? Price started creating this channel. This is a descending channel or falling wedge. Wedge you can call it, because the lines are slowly coming together. So whatever it is, falling wedge or descending channel, both have a bias, both have a bullish bias. That means price should go up. And look at this point. From this point, prices shoot up. And not only shoot up, price has broken the trend line. Not only that, price has created a higher high, breaking the lower high. This is a great signal that price wants to go up. But before going up, price often comes back and retests the broken trend line, and that is what happening. And along with that, we have a nice trap zone here. So our entry is, it could be the entry of 70-80, but yes, you might not get the entry there again. I don't give a stop loss for an investment trade. We have another level below, so I expect current market price could be our entry, and hold on this and you can easily make your money double. Though I think it will go up to 480 or levels, but yes, at least you from price is standing at 85, I think. Close price is 82.65. So our target could be 165. That will be doubling the money. Let's see how it makes. So sell will be my new investment call for all of you. With this, I conclude today's session. Hope you liked my session. If you like my session, please do like, subscribe and share my channel, and don't forget to comment. And I wish all of you a very happy new year and a prosperous new year. Sorry. Thank you very much for joining. Thank you. Thank you so very much.